and a good morning to you all. It is a Tuesday morning. It's 11 a.m. and that's right. It is time for our next live coffee club show. Do let us know in the comments if there's something you'd like us to talk about, but you'll probably notice we got ourselves a special guest. Now, usually we bring on someone who, might trade, or we bring on someone who might talk with clients, but here's someone who's done both and has experienced both the ups and the downs of trading. I want to welcome Noman. Noman, pleasure to have you here with us today.
Lovely being here, and good morning to you all as well.
Well, it's coffee club. Usually you have to have a coffee, but I break the rules every day. I've got water.
Me too.
Yes,
we'll bottle of water this morning.
That's all we've got this morning. But what's it called? We do have quite a bit to get through before we're actually going to discuss with Noman about what he sees, what clients are talking to him about, and what they're seeing as of late. What markets they like to trade, so on and so forth. But let's go ahead and get through our talking points. Just to see that when it comes to the markets so far, it's been a story of. Ever since that, late last week, you had U.S. President Trump coming out and saying 50% tariffs on the EU, and you saw markets drop, and then all of a sudden, no, wait a minute, that's not the case. We're going to delay it until July instead of June, and that helps markets sort of recover. We did see futures pointing up. They aren't as high today as they were yesterday, but that's because U.S. markets were closed. But it's essentially got Nasdaq, S&P down net up about roughly 1%, and that, of course, is relative positive. Let's see if that can hold given what we have today. But we did see Asia in the red, China a bit down, even though its industrial profits did rise. Despite the trade tensions and stocks. I'm just going to go through this one, and then we'll get to FX, which I know you want to talk about. But when it comes to stocks. You look at the European equities, and the one thing that Germany likes, of course, they don't want tariffs, right? And their automakers don't like tariffs. So Das Auto, or car companies, they essentially were up, VW, BMW, Mercedes, and Daimler. But, and I know you were talking to me about this earlier, what on earth is going on with the dollar?
Yeah, it's interesting because I obviously, from the accent, you can probably tell, come from the UK. And when I first relocated to the UAE, the pound was a lot less stronger than it is now. So this was before all the
that's putting it politely, a lot less stronger. You basically, yes. Without swearing and seeing what's going on with the dollar.
Exactly. So over the last few weeks and months, the pound's been getting stronger, and it's been with the dollar weakening. But wise man always said to me, betting against the dollar is not always the best decision. Really? So it's yet to remain seen of how that kind of pans out. Since Trump's come into the markets, volatility has been second to none. It'll be interesting.
Yeah, no, there's also the matter of it, because you bring up the matter of the dollar, because the issue that's happened time and again is that, first when Trump first won the presidency and all that, it's for the second time, there was this Mar-a-Lago Accord theory, a conspiracy theory kind of coming out going, do they want a controlled decline of the dollar against the key FX pairs, against the euro, against the pound and things like that? Do they want to weaken it on purpose to try and to make it more profitable for companies to shift back to the US and produce more and make their exports more competitive? And when it first came out, I see it, I go through the media every day. I got to write the reports and all that kind of stuff. So at first I was only seeing on like the fringe media. But then when you see the dollar decline, it's down about 10% from the highs of January, 10%. When it goes down this far, this fast, this quickly, and this notable against the key currencies and the FX majors, all of a sudden you're hearing the Reuters and the Bloombergs picking up and going, it's the Mar-a-Lago Accord. It's agreed. This is an agreement between them, because otherwise the central banks would never allow this to happen, to go by 10% this quickly. Usually it's a bit more, the descent is more controlled, if you will. And at the end of the day, you got central banks on both sides trying to control to some extent. I mean, they'll give some leeway day to day or week to week, but at the end of the day, when you have a 10% move, that doesn't happen unless they sort of let go of something. And there's that matter of everyone's wondering, does that mean that therefore, due to this Mar-a-Lago Accord or whatever, that therefore we're looking at a situation where the dollar is going to be in decline? And speaking of which, you're getting financial institutions that usually say, when they predict the euro and stuff a year from now, they go, it's 113. Oh, we see it at 115 or 112. It's always a small amount up or down, right? They're very conservative about it, so they're not way off, or so they don't come off as wrong. And then you got guys like, if I'm not mistaken, it was Citi coming out going, second quarter next year, so a year from now, 125 euro USD. 130 USD JPY. It's at 143 right now.
I mean, look, it's interesting. The whole conspiracy theory there definitely has some rationale, right? Trump's all about making America great again. And if that means, like you said, the dollar weakening, and that being a sort of reason to shift to the US and start manufacturing and doing business there, that has some legs. But I mean, these things are always, beyond what we understand.
Yeah, and speaking of which, here it is on Capital.com's trading platform. For those of you that are interested, there are the highs that we had back in January, and bam, from 110 all the way down to about 98. Not the best situation when it comes to the US dollar. And I got to say, dollar bears, by the way, for a long time, they were trying to say that dollar's going to weaken, and it finally has happened. And you get the feeling like a lot of people are going, well, does it have more room to run? And of course, that's always going to be a question that's there. Another thing I want to bring up, just so you guys know, because one of the notable places is USD/JPY, and the reason why it has to do with, I know we don't like to go into too much into bond yields and stuff because it's usually a more boring topic for traders and non-traders alike. But essentially, we had Japanese yields surging, and that kind of sent this Japanese yen higher, which means if you're trading USD/JPY, it's going to go lower because it's the dollar against the yen. And I'll go ahead and bring it up on the chart momentarily, but we had this move earlier today. I'm going to zoom back into the daily time frame for USD/JPY, and it dipped briefly, got very close to 142, and then bam, it just jumped. The dollar strengthened. And one of the reasons why, I'll go ahead and bring up the talking points. One of the reasons why is because there's this unconfirmed report that the Ministry of Finance in Japan, they're going to try and tweak things so that yields on the further end, the 20 and 30, don't go up too high, basically. And that just basically means they're trying to control this, which if you're controlling the bond market there, that would mean you're controlling yield spreads, which means USD/JPY will hopefully be a little more controlled. But I'll tell you what isn't so controlled this morning. Gold. Yeah, it's been a bit of a drop. I'll bring it up right now on our platform. Where are you? There you are. Down over 1% this morning. Ever since we had the tariff delay announcement, we saw gold take a hit, but it's down even more this morning. It's not far off breaking beneath $3,300. And I think this is where I'm going to guess you've got to have several clients that are into, because gold. This is Dubai, where and even outside of Dubai, you got lots of people that love to trade gold. And
I mean, it's been one of the most interesting things to have seen in the market. And I've always had an interest in the market, especially over the last few years, and I haven't quite seen anything like it. I mean, initially when it was hovering around the 2,500 mark, a lot of people were saying there's going to be some sort of pullback, and then it runs to 3,000. Same sort of narrative again. There's going to be an imminent pullback. Runs to 3,500, and that imminent pullback did come. But I mean, it's just been between this range of still staying relatively strong above 3,000, but not quite reaching the highs again. But like you said, a lot of my clients, love trading gold, very, very bullish even still. Expecting this sort of run to kind of run and continue. But it's yet to be seen. It's a safe haven, and with the volatility in the markets, you can imagine why people turn to an asset class like commodities like gold and stuff. But $30 down since the tariff delay announcement, which is again quite a move. Yeah,
I think that was 30 when I was writing the talking points. I think it's about 50 now. But anyhow, it's just dropping. It's definitely a negative. You can see though that lower highs and lower lows, you're working within a pretty large bear channel, and that's why when it comes to the daily time frame, by the way, the technical overview on the weekly, it's still bull average. You're still got some bullish technicals there, but on the daily, consolidation volatile. Basically, daily levels have a less of a chance of holding, especially intraday, even if they manage to hold intraday. And when it comes to traders on our end, by the way, because we are talking with one of our a premium client manager, Noman.
Yes.
Naturally, he knows where they stand. They're obviously majority to the buy side. Similar, by the way, when it comes to COT speculators, according to the latest COT report. So with that in mind, I guess we'll go ahead and continue with our next point, and that's crypto. Still hovering within the 108 to 110K range, and everyone's before the next breakout, which everyone is hoping, or most people are hoping, it's obviously the upside because they're holding long. Most of our clients are holding long. But then again, have you seen like a bigger interest in terms of crypto trading on your end, or is that just sort of?
Yeah, again, it's funny because a couple of months ago, I had one of my clients who Bitcoin at the time was hovering at about 100,000.
Yeah.
And he visited me, we caught up over coffee, and he, for some reason, was like, I can see Bitcoin going to 75, having a fresh liquidity run, and then running to the all highs. And I remember at that time looking at him thinking, that's a bold statement. And the funny thing is that's exactly how it's turned out.
Wow.
Especially over the last few weeks, once it hit over 100 again, and we're hitting the 110s, and a lot of my clients now again are very bullish. They're like, it's going to go to all-time highs. Someone made an audacious claim to me that they think it's going to hit 250 next year. So this whole frenzy at once, clients become super bullish as well. But my role of talking to clients is we pride ourselves on our clients being in the best position. So I'm always reiterating the importance of stop loss, take profit, because Monte, you've seen the market. The volatility is unreal, right?
In crypto especially.
Yeah. I mean, you can be up a couple of thousand, and within a couple of minutes, something comes out, some sort of news, and all of a sudden, you're deep in the red. We want to see clients make money.
Obviously.
We aren't like other brokers who just want you to carry on, if the position's going against you, which is why me and my colleagues and the whole team, we're always there on hand to try to be like having a stop loss and take profit is never a bad idea, because both ways you come up better off.
And speaking of that, that's one of the reasons why when it comes to the market report, I always put the stop loss. I don't put a take profit there, but the stop loss especially, because I think putting a take profit, and we all naturally can. That's easy for us as human beings. The
Yep.
stop loss is always the more difficult part, and I always feel like that's the part that we need to stress more and more, so
Yep.
that people can at least limit their losses.
Yep.
And the idea that, I mean, you speak to clients, and sometimes they go like, "Oh, they'll be like, this is the trade. Well, what if you're wrong? No, I'm not going to be wrong. What do you,
Yeah,
well, what if
yeah.
you're wrong
Yeah,
though?
yeah.
It's like it can happen. It can happen, and indeed it does happen. Nobody's perfect. There are going to be sometimes where there's a mistake. Anyhow, for today, we are back from the U.S. holiday. You got durables data expected to show contraction. You got housing price data, CB's consumer confidence, and then of course Nvidia's earnings. This is a brief preview of this before we get into client facts with Noman. But essentially, we're looking at earnings per share of 88 cents, revenue over $43 billion. Nvidia. This is going to be tomorrow, by the way. We won't be available on Thursday, but we'll be back next Monday. So we are going through the earnings preview right now. But I think the bigger issue for Nvidia is how are they going to get around the export restrictions, especially to China, because they don't want to lose that market to say Huawei and the like. So there was the unconfirmed report with regards to whether or not they're going to come out with a budget-friendly Blackwell AI chip. Just again, they keep tweaking things for China, and then they get another hit with another export restriction. Are they going to come out with another one thereafter? We did have deals in the GCC recently. That was obviously a big boost when it comes to demand on the hardware front, and of course they've been beating estimates when it comes, quarterly estimates, but but not as much as they used to before. And I think that's the issue. Everyone wants to see them beat by a lot and and better than they were before. And it's just difficult. You can't have that. You have exponential growth up to a certain point where eventually you go, okay, you know what? This is as good as it's probably going to get, right? And let's not forget, it is the AI engine. So the whole AI trade, the whole semiconductor trade, you can expect tech, semiconductors in general, the whole market to move according to what happens. And analyst recommendations, by the way, we don't give out any over here. You can see the disclaimer, and there'll be a nice big one at the end of the video as well. But you look at our, according to Yahoo Finance, where thankfully they've tallied up for us 12 strong buy, 41 buy, 9 for hold and underperform, with an average target still above where it currently stands at 162.7. We do, by the way, have it on our platform to trade and a whole lot more, over 3,000 markets. But let me just go ahead and pull up Nvidia, where you can see where the price is right now at 131.20, and where 92% of clients on our end are holding long positions. We also have it available on our daily market report, which is released at 9 a.m. Dubai time. And with that, we have client facts with Noman. So just I want to spend the next 5 or so minutes before we end the show. Give us what do you see from clients on your end? What would they like to see, so on and so forth?
Yeah, I mean, like I said, it's been, what a ride it's been since Trump's coming in again. I think at the start of the let's move it back to the end of last year. So with the election and everything, markets were obviously running very bullish towards the end of the year. People were saying, it's not really running on a lot of fundamentals. There's a lot of news. Trump's coming in, and a lot of people were calling corrections. Now, the year starts quite strong, and suddenly out of nowhere, the tariffs start. And markets took, what isn't a hit. It was more than just a hit. We saw
Liberation Day. This is the S&P 500, by the way, on our platform, or US 500 for those of you that are trading it on Capital.com. And then you had a bit of the pullback with all the whole tariff news, and then bam, you had the Liberation Day, and then you had the little bit of the 90-day tariff pause and all that backtracking a bit. But yeah, sorry, go on.
And what a rebound from the levels you can see there. Like S&P 500 was actually below 5,000, and it's now trading, back up to 5,000,
up 22%,
yeah. And what a move that was, right? So clients naturally, when they saw the kind of bottom, it was one of those. You must see it quite a lot, the falling knife theory, right? Which is, of what point is the right point? And everyone became super bullish. And one thing Trump's always very good for is he always has the US and the economy in mind, right? So that the markets can't actually, go down drastically over the long term, because it makes him look bad. And clients kind of felt that sentiment as well. He's always pro US, pro the markets, and they kind of took the punt off, let's long the market. And over the last few weeks, it's panned out really well for them, because the market's rebounded, like we were just saying, quite a lot. We're not talking a couple of percent, we're talking the tens of percent. And that naturally also, the other side of that was the commodity side of gold, right? Gold kind of became the safe haven when all this volatility was happening. People were like, let's park our money into something which is going to be more safe, which was gold. And like I touched on, briefly before, gold from the 2,000 mark all the way to racing to 3,500. Again, Monty, you've been in the market for years. This isn't something you generally would see in such a short duration of time.
Yeah.
Again, but coming back to it from the role I play, which is, it's good being bullish on a lot of things, but you've still got to have the importance of managing your risk. Because as much as the market's rebounded, there could be news that comes out at any time where the market goes the other way. And we saw that on the weekend, actually, on Friday, right? With the tariff news on the EU. That came unexpectedly.
Yeah.
And the markets, we saw it dipped. And, luckily over the weekend, the news came out, it was going to be delayed till July, and now the markets have recovered. But, if you were on the wrong side of that trade, that, you'd be done.
Yeah.
So, me and my team, we're always regularly on the phone to clients saying, this, CPI is coming out, or PPI, or this news is coming out, just manage your risk as best as you can. Because at the end of the day, we want clients to be in the best position, we want them to be making money and be happy overall,
Of course,
and that's not always easy.
Yeah, because I would assume a happy client, a happy premium client means a happy premium client manager. Is
well,
that right? Like happy wife, happy life.
Yeah, you'd hope so. It's not,
but it's not the other way around. The same way you go happy life doesn't necessarily mean happy wife. So there you go.
Yeah,
it doesn't always go. Yeah, not necessarily vice versa.
It's not always hand in hand. Yeah. But look, we do our best to try and be there for the clients as best as we can. And we're not like other brokers who just want you to trade and always be the market going against you. We'll always be on hand to kind of give you impartial key takeaways off that take profit, your stop loss, and like you were saying, taking profit. I always say to my clients, you making money even if it's less than you were expecting. So for example, if your take profit was plus $5,000 and you close it for some reason at plus $2,500 because you thought the market, that is better than you losing money.
True.
That is better than you being break even.
True.
And the same way the other way, if it hits your stop loss and you've only lost $1,000 and 5 minutes after the position actually would have been minus 10,000, your minus 1,000 put you in a much better position than your minus 10.
You've kind of made 9,000 in a way.
In a way, life's all about perspective. It's about how you see it.
True. But as one professional trader once told me, he said, when you first start trading, this was in the very beginning, he's like, try to avoid losing money. That's the goal. It doesn't mean you can't, and I think I don't want people to take this mistake where they start to make their stop loss so large so that they never lose on a trade, and then when they lose that one trade, they lose a lot. That's not what that means. It means is that when you're losing, try to limit those losses as much as possible.
Yep.
And then afterwards, so even if you're losing a little bit, a lot, for example, but at the end of the day, you're trying to gain some of that upside when it starts to go in your favor. And
yeah, exactly. I mean, that's quite an interesting point off. You can't always have a too small of a stop loss either, right? Or like a too small of take profit, where if the market goes on the other side of you by a fraction, you're stopped out, or you've taken a profit. Like, you've got to manage the whole position based on how much risk you're willing to take, and how much how much capital is in the account, and it's always just like measuring it, slowly, like being like, what am I comfortable being down and being able to lose, and vice versa the other way around. Like, how much am I comfortable and happy to make? And I always say, the hare and the tortoise, you must have heard about the story, right? You can't always just run and be like, I want to make X amount every single week, right? If you take bits and bits every single day and you're profitable, you're doing better than most people.
Yeah.
Especially in today's market.
Yeah.
Right. Market which is very, very volatile.
And do you see that? Have you seen? I guess one final question, or one main question, is that, have you seen that they've been taking like the appetite for larger, I don't want to say larger risk, but putting larger take profit and larger stop loss just because you had an uptick in volatility, right? Because if you want to trade that, or it's just a matter of they've lowered their position size a little bit and then they just raise the level so they can try to capitalize on some of this move. Because at the end of the day, it's what the market gives you, right? Even if you want to take a consistent amount.
It's probably the latter, but I have a broad range of clients. So, some clients are very happy going with that really large size, and just hoping the market runs in the position they're in. If you're long on something and you're taking a large size and it moves by a few pips, you've done really well. But on the flip side, the market goes against you and you lose. And then you've got the other type of traders who, like you were saying, would take a smaller position but have a higher threshold of when it comes to take profit or stop loss. And they're able to navigate volatility a little bit better than the big guys. So, someone taking a really large position and some news comes out any second, you kind of in a less better position than the other side type of clients.
Got it. Well, and is there anything else you'd like to point out then before we head out? Because this is some we need to have you on more often. I mean, I know you're taking Chris's spot, but that's we don't want he wouldn't want it to happen too often, but we need to.
I mean, look, from our perspective, manage risk accordingly. Okay. And making any money in this market is a luxury. Because the market's been up and down, and if you manage your risk and you're making money, kudos to you.
Nice. And with that, we're going to approach the end of our show. I want to thank you guys so much for watching. Thank you, Noman, for coming on.
The invite.
And as always, good luck out there and happy ticks.